I guess, to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
Whoa!
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
And welcome to Phil's Gang, my podcast radio show. Okay, so tomorrow's the big day. Everybody's all excited. We're going to cut rates, and they think this is it. This rate cut is the one they need. This is the one that Trump says he needs this one to get that 10-year Treasury finally to come down and stay down and get it below 4%. He's betting on that. He's got to get that rate down. Actually, he's trying to get that rate down, hoping the 10-year Treasury would drop below 3% is his hope, so that we can survive what's going on. We are financing our deficits, our national debt, with 1 month, 2 months, 6 month T-bills. You can't do that. That kills the economy. It kills the economy. That's crazy. But again, we can't go to Japan, China, or UK, our biggest lenders. They'll laugh at us. They're out there buying gold, and who blames them? So Trump is forced to rely on T-bills. You can't do that. If you're going to have any kind of an economy, you talk about inflation. You want to see inflation. And that's what worries me about tomorrow. Because remember, the bond market told Powell to go stuff it a year ago when he cut rates by 50 basis points. He said, what the hell are you doing? 50 basis points is not going to fix, it's not going to be enough to stimulate the economy. And we can't cut rates. What are you doing? Cutting yields? 10-year Treasury yields? What are you, nuts? If we cut 10-year Treasury yields, who's going to come to the auction? So that we can start finally funding our debt long term, 20 years, 30 years, not 1 month, 3 months, 6 months, which is killing us. So the worries part of this is that those reasons I gave you last week, the 3 reasons that why the bond market revolted, had a big revolt, and the 10-year Treasury yield shot up. And by the way, if that happens tomorrow, I assume the stock market will go up as it did back in 2024. But those 3 reasons that why this backfired a year ago, September, those reasons are still with us, and they're worse. They're worse. Now, the other thing that's going on that nobody wants to talk about is these bankers, the banksters. Here we are again. You know what's really interesting about these bankers? I just hate bankers. I mean, they're just bad dudes. I mean, they're terrible. And what happens is these bankers, if you ever notice the commercials, right, the TV commercials, how the banks always tell you, and they put a narrative out like they're the brightest, they're the best, they're the smartest people on the planet. You need to depend on them. You need them to manage your money, especially your retirement. And then you see Bambi the deer, right, jumping over a little creek in a cabin in the woods, and everybody's retired in that cabin, and things are just wonderful. That's all crap. They're not bright. They're not smart. That's why we're in the mess we're in now. If they're bright or they're smart, they wouldn't have accumulated losses of $600 billion, these banks. $600 billion. What are you, nuts? These are the losses they've been carrying. But, again, they don't, they got enough money to not cover the losses, but to put the losses off where they don't have to sell them to the Federal Reserve to put the losses on their balance sheet. If they do that, then they have to record the losses. But my point is this, that the banks are in bad shape. $600 billion. Now think about this. If these are the brightest and the smartest people, these banksters, gangsters, right? Then why the hell did they lose $600 billion? Because they didn't anticipate. Remember, the stock market is all about anticipation. Being in business, you have to anticipate. You have to look in the future. You have to decide, okay, what will happen? What might happen? These dopes never did that. So what did they do? They just sat back, and they never anticipated that, inflation would go up. They just thought inflation would stay low because, after all, we got Powell in there. So, but they were surprised. So what did they do? They thought that they would go out and purchase bonds at fixed rates at 2.7%. Never anticipating for a moment they could get screwed on these fixed rate bonds. So they went and bought a bunch of them. They never anticipated rates could go, or inflation go up to 9%. They never anticipated. They thought that would never happen. Remember, you got to think out. You got to anticipate. They never anticipated the possibility of increased money supply during COVID. Remember during COVID, all that money we printed and printed and printed. They never anticipated the supply chain disruptions or the ports closing. They never anticipated any of that. It was never going to happen. And even worse, they never anticipated Biden's remember the fake Inflation Reduction Act, which was not which was never intended to reduce inflation. It was intended to increase inflation. I mean, the Inflation Reduction Act, what are you, nuts? The trillions of dollars we spent on all this green energy and these climate initiatives cost us a fortune. Inflation went up. But they used the name to deceive us. The Inflation Reduction Act, when inflation went through the roof. All these climate initiatives. You got to be crazy. And then these banks made another bad decision we're living with tomorrow. They decided to purchase longer maturing government-backed debt. What are they, nuts? That exposed them to even more declines, greater declines. And that pushed many of our banks to where we're now technically insolvent. Now, all this is known as unrealized losses. That's what we have. Now, it doesn't mean the banks are going to go upside down and crash like in 2008, because we have done something different that we didn't have in 2008. We didn't have the repo market. So these unrealized losses have been sitting on their books for years. And what it does, it kills your cash flow. That's the problem. Where are you going to get the cash from? And we just finished, think about this going into tomorrow, we just finished QT. We just drained out $2 trillion out of the financial system. So the first couple of weeks in December here, the Fed had to go out and fund what they call the Repo Act. They had to go and make agreements with the banks. They went in and they said to Treasury, look, our banks don't have any capital, they can't loan. What we're going to do is print this money for us, print a couple of trillion for us, and we're going to go to the banks and we're going to buy from them their garbage. They're garbage. Remember they did that with Silicon Valley Bank in 2023? That's the other thing I don't understand. How the hell did same thing happen in March 10th, 2023 with Silicon Valley, First Republic, what was the Signature Bank? In March 2023, remember they collapsed? How could that have happened? It makes no sense. When they saw what was going on in 2022. So remember, those banks, same exact thing happened. They went out and bought all these treasuries that were fixed in these low rates. And then the interest rates went, and remember, Powell had to raise, the rates to fight all this inflation. But getting back to these repo agreements, all that is, remember, is very inflationary. And this is what worries me about tomorrow. In 2024, the bond market told Powell to go stick it because he said, look, the bond market said, this is crazy. You haven't met your target, 2% inflation target. So why would we back this? Are you kidding? You didn't hit your inflation target of 2%. It's still at 3% today. So that's why a year ago, the bond market told them to stick it. That's one of the biggest reasons. So these repo agreements are set up in a way that they go and get the Treasury Department print money and they give the money to the Fed. The Fed goes to the banks, buy their treasuries, buy their garbage, put it on their balance sheet. Now the banks have money to go guess where that money goes? The money doesn't go into productivity. The money doesn't go to the CEOs where they take the money and they buy new business equipment. They don't have any business investment. They don't increase productivity to increase wages, to increase jobs. Oh, no. 90% of that money goes to the CEOs of publicly traded companies to buy their own stocks so that we can keep creating this incredible bubble that we have. So this repo agreement, there is no guarantee when they say to the banks, I'm going to give you $500 million and you got to buy these treasuries back for me at even a higher rate than I paid you. And they go, okay, no problem. But they won't. They're not going to buy them back. And you think Powell cares? It's his banks. It's his own banks. So he doesn't care if they pay him back. And they're not going to be able to pay them back. All these repo agreements, $35 billion in the last, 3 weeks? That's a historic number. We never did that in 3 weeks. That's why these banks, you got to look at these banks. There's a real problem here. And that's why inflation goes through the roof. And I'm worried tomorrow that's going to shoot, the bond market's going to tell the stock market, go screw, man. This is BS. Your inflation's already above your Fed rate. You're at 3%. And you said you're going to reduce it to 2%. You're going to use 25 basis points to stimulate the economy. You're going to cut just 25 basis points when you cut 50 basis points 12 months ago, and it didn't stimulate squat. And you want us to go along, the bond market go along with this? We need higher rates. We need higher yields to attract investors to buy our debt. So what they're doing now with this repo agreement, it's a big nothing. Because the banks are never going to pay back the Federal Reserve, who owns the banks, who controls the banks. They're not going to pay that money back. So this is going to be even more inflation. So again, this QT, what Powell did, is already taken out in 2 years, $2 trillion out of our financial system. No wonder there's no money. No money. It's just crazy. And every time you have the Treasury print money to go save these banks, to buy their stocks, to buy their fixed rate treasuries, that's all inflation. So remember 2008, the only thing that was different in 2008, we didn't bail out, the Fed didn't bail out banks with repos back then. Now they're doing it. But it's only it just stalls the crash. It just stalls the pop in the bubble. People think tomorrow that, this rate cut's going to be wonderful. and everything's just great. And oh, gee, we just did 35 billion in repos. We just saved the banks from collapsing, cash flow wise. I'm not talking about collapsing and going out of business. I'm talking cash flow wise. They have no cash. They can't make loans to you. But they don't care about you. They don't care about Main Street. They care about, do they have enough money on hand to give money to the CEOs to do stock buybacks so they can artificially push up stock prices.
Got 1 minute.
So this and again, remember, and most people understand this. When QT ended December 2nd this year, after draining out $2.4 trillion out of the financial system, and the bank losses are at $600 billion, a near record. That's 6 times larger in 2008. Nobody's even thinking about that. Yields are going to keep rising. Bond prices are going to keep falling. We could have a bond crisis. Banks are desperate for operating capital. And you know what? If you have a repo, it tells you something is wrong with your financial system in your country. But nobody wants to say that. We'll be right back. Take a look at some stocks that we do.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, you need good direction. You don't get that from your CNBC and the Fox Business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
You know, the one thing about investing in stocks, and I always say this all the time, everybody always asks, can you give me a hot stock? What stock should I buy? Always looking for hot stocks. And Wall Street's terrible about that. They're going to give you their 5 top stocks. There's no such thing as a top stock. And it's destroyed the retail investor. Totally destroyed them. Retail investors, or we call them now tourists, they're really just gamblers. They don't want to learn. Do you know that 90% of retail customers, that we call them tourists, retail investors we call tourists, never look at volume. It was like 91.5%, almost 92%. Never look at volume bars on their chart. The reason 90% of people lose money in the stock market because they listen to these a-holes on TVs, these jibber-jabbers, always looking to them for this magical stock, this stock that's going to go up. But it's already gone up when you get it. The retail investor gets screwed. The stock's already gone up. I explained yesterday. People will never understand this. No matter what you try to tell them, they just won't get it. They won't believe you. If you take any stock on the way up, right? Every stock on the way up, what do? They give you buy signals, right? Buy recommendations. And that's fine on the way up because your trend's going up. But the terrible thing is that when it peaks, just like Enron did, remember Enron? And when, as a matter of fact, I'm going to bring up a chart to show you this. This is the best way to explain how they screw you good. And you got to start looking at volume. Volume is everything, and trend is everything. And if you don't believe that, you're never going to make money. And don't forget, every time you get hit, every time there's money, let me see if I can pull this chart up here. Hold on 1 second. Let me see if I can find it. Trying to find my Enron chart here. Is it on here? Chart. Yeah, where's that one? Is it on the other one? I think it's maybe on my show one. Coffee Talk. Let's see if it's on Coffee Talk. Nope. Where the hell we got Enron? Hold on, gang.
Show.
I'm going to pull show back up. Where's my Enron? Let's see. Just had it the other day. I was talking about it. Enron. Well, anyways, I don't, it's not here. Unless you can see it quickly. I don't want to take any more time. Go over here, Enron. Now, for some reason, it's gone. Okay, it's not here. It's gone. It's outside of I had my inventory. I don't know where the hell it went. Okay, anyways, here's what I'm trying to prove is this. When you have a stock, now my pen's not working. That's great. Okay, when you have a stock and it's on the way up and you get your buying a dip, that's perfectly fine. And all the way up, just like Enron. Remember before Enron collapsed, they had buy recommendations. But when it started to go down on the other side, and your stock, like Enron, was underneath the supports of the 50-day moving average, the 200-day moving average. Remember, on the way up, that's your uptrend, the stock has to be above the 50-day moving average and the 200-day moving average. If you're not, you're screwed. You've got to be above it. So while it is above it and you're getting buy recommendations and buying the dip, that's just fine. But when it starts going down, why don't they change it to sell recommendations? No, they don't, do they? They keep it as buy recommendation as the stock starts going down a severe downtrend, just like Enron, all the way down. They kept buy recommendations because they do that so you will keep buying on the dip, so you keep cost averaging down. Why do they do that? So that Morgan Stanley, Goldman Sachs, JP Morgan, Citibank, okay, Wells Fargo can get their pension funds out, get their biggest investors out. The pension fund of California, the pension fund of Virginia, the police department, the steel workers, they got to get them out. So what they do is use you to hold the market up by having you cost average down, by you buying on the dips in a down declining market. They use you to hold the market up, and then they lie to you with the recommendations. They have the recommendation as buy. They never change on the way up, which is perfectly fine, buy recommendations. They never change it to a sell recommendation. And that's done for a purpose, to make sure you go in and you keep buying on dips. And then when all the pensions are out, and Goldman Sachs has their guys out, and Wells Fargo has their institutions out, and everybody's out, they pull the plug, and that's when the market collapsed. And everybody got caught with Enron. They always do that. It's going to happen again. So you got to start paying more attention to what's going on with trends, and people just don't do that. They just don't do it. And you got to understand that one of the biggest problems we got in our stock market, okay, is our deficits are killing us. Deficits are killing us. We can't keep with these deficits. You can't have a good, solid stock market, a good, solid economy when we're spending $7 trillion and bringing in $5 trillion. These deficits are just terrible. And then at the end of the day, what's the real problem? When you really listen to all this BS, how terrific the stock market is, how strong it is, and you look at the numbers, you can get really grumpy. So what are they talking about? How the consumer's strong. Well, if the economy's strong, how can the economy be strong if they have to do these repos? How can it be strong? It's not. And how can the consumer be strong? They tell us the consumer's strong. What really got me grumpy was Black Friday. They came out and said, oh, look at this. Black Friday this year is much better than last year. Whoa, sales have increased. Boy, look how strong the consumer is. But they failed to tell you 95% of the purchases were mostly layaways. I'll buy now and pay you later. And credit cards, who pay 22%. They never can pay their credit card off after 30 days. They have no money. 95% of the sales had no money. The people who bought had no money in their wallet. And they're telling us our labor market's strong. We have a good labor market. What are you, nuts? So today it's more important than ever not to listen and not to keep asking, what do you think the market's going to do? What do you think the stock's going to do? You think the market will crash? It doesn't mean squat. You got to be focusing on, okay, when it happens, I'm going to be prepared and I'm going to make money. When the market goes up, you're prepared. You're going to make money. But with the market coming down, you are not prepared. And you never make money. And many times people are surprised when you lose 40% in a crash. I mean, look at our crashes. 1974, 30% crash. 2000, the dot-com crash, 23%. 2008, the financial crash, the housing crash, 30%. 30% means you got to get back, even that 30%, you got to get back nearly 60%. When was the last time you made 60% on your 401k? So what's happening is we're being sold a bunch of nonsense. But the important thing when you're trading is don't think about what's the hot stock. Which is that stock I should buy that I'm going to make a ton of money on? It doesn't matter. What matters is that you are always in a position to make money if the market's going down and going up. Now you enjoy trading. Now you will be making money. The only reason, remember, 92% of the gains in the stock market go to the top 10% of our population. Isn't that crazy? 28%, we have our people in 401ks. They're never going to make any money at the end of the day. They always lose money in crashes, and they never make money. They never make money. By the time they retire, they're looking for a part-time job at a supermarket, or a part-time job at a movie theater, or they're looking for a part-time job over at some department store, a greeter. Isn't that a shame? You work your whole life and you gotta go and go to Lowe's and be a greeter, or go to Home Depot. I see people at Home Depot that are in their 70s and 80s working there. You go to the supermarket, for God's sakes, the guy working the cash register almost 90. And he says, can I take your groceries out? No, let me take, if I could, I would pick them up, put them in the cart, and I'd drive them out with me. I roll them out of the store so you don't have to walk. So crashes crashes cannot be avoided as part of our system, but it doesn't mean you have to lose money every time there's a crash or correction. And when you have a market that doesn't have healthy corrections, a 5% correction at least once a quarter, then you know the market's rigged to the upside. And there's nothing better than a rigged market. Nothing better. You want to make money, keep rigging the market. They've been rigging the stock market, making it a bubble since 2008 with stock buybacks, with QE. QE has done terrible things to our economy. It's all showing up now. But it shouldn't make any difference to you. You should be delighted the market is rigged, because we can make more money in a rigged market than an honest market, as long as you know how to sell short. You got to know how to do both. And as you look at the economy, I don't care about I care in a way that, of course, my neighbors, my friends, I don't want to see them get hurt. The labor market's a big lie. Jamie Dimon's a big liar. He comes out the other day and says, oh, there's hardly any layoffs. We're at a 3-year low. Really? 3-year low? Let me see. Let's look at the numbers. 3-year low in layoffs? How can that be when in January 2025 to December 2025, year to date, we have lost 1.1 million jobs. That's a 54% increase between last year and this year. What, are you nuts? We lost 71,000 jobs in November. Remember, we had a near record 1.1 million layoffs 2025. Bankruptcies are the highest in 15 years. Red Lobster, Hooters, and the one I looked at and I showed you yesterday was 18-wheelers, the sale of 18-wheelers, trucks, you know, with the cabins where the drivers sleep in the cabins. They bring our freight back and forth, coast to coast. You know those truck sales are down over 40 to 47%. This is crazy. Since 2021, our wages have increased 20%. 20%. But not enough. That's not enough. Our wages are behind our inflation. Our cost of food is up. So let's take food. Food's up about 27%, but your wages went up only 20%. How's that work out? Shelter's up 50%. Since 2015. It's up 25% from 2021. Paycheck to paycheck. People are living paycheck to paycheck, which has increased from 46% to 68%. Application denials are soaring. Mortgage applications, we never saw rejections up 23%. Mortgage refis, people are storming the banks to refi, to hang on. They're trying to refi their house.
1 minute.
Rejections are up 46%. Look, tomorrow, when they give you that number, don't chase anything. Whatever way the market goes on the announcement, it's going to turn around after a few minutes and go the opposite way. So when they make the announcement, if the market starts going up, don't start chasing the market up. Goes down, don't short it down. It will always stop and turn around and go the opposite way. The market makers will trip you up, will fool you. And the only place that you're really going to make money, again, this year is going to be in your metals. We made a tremendous amount of money in our gold mining stocks this year. And I told them that January last year, right? I told them in January 2025. So that's where the money's going to be, because our inflation's going to get worse and worse. Our dollar's going to get weaker and weaker. Our purchasing power of the dollar's sinking. People are going to run to gold. I'll see you on the charts tomorrow. Same time, same place. Phil's gang. Join my gang.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's